Hey, hello friends. Welcome back to this YouTube channel 30CAGR. This is Raj. In this video, let's see what exactly is limit price protection, LPP. Of late, so many people have been asking me about this LPP because their orders were being rejected by the exchange, and no, so many people are getting confused as in what exactly is this LPP and what is the right or correct range that we have to give in order to escape these rejections. All right. So please pay attention. It's a little tricky. 95% of the people are miscalculating the ranges and they are misinterpreting the entire logic. So in this video, let's see what exactly is this, and we will also see whether this limit price protection is really helping the users or not. Okay, so stay tuned. And before we begin, if you haven't subscribed, please ensure that you subscribe to this channel because we are also coming up with a lot of new strategies and interesting topics in future. So just ensure that you don't miss out on all those things. Please hit on subscribe button and also click on the bell icon. Okay. All right. So even before going to limit price protection, first let's see why NSA has introduced this. For the last 1.5, 2 years, if you have observed the markets have been fluctuating a lot, right? And as a result of that, we are also seeing a lot of freak trades. So what exactly is freak trade? There will be a lot of fluctuation and volatility in any stock or option, especially in options, Nifty or Bank Nifty options. You would probably see option moving smoothly, and then all of a sudden you see this kind of movement, right? And so many stop losses will get hit and it moves totally out of the range. It might go from 100 rupees to even 900,000 rupees and then again come back in fraction of seconds. These kinds of freak trades keep happening, or at least in the past they happened, and NSA have been trying its best to probably come up with a lot of frameworks and rules, and as part of that they have introduced something called LPP, which is limit price protection, right? Now we will see what exactly is this LPP, and how to calculate this and interpret this correctly. All right, so this is a circular that they have released in the month of October 2022. uh, as per this, what they say is, first NSE calculates something called reference price. Please understand this. This is where so many people are going wrong. So what they are doing is they are calculating something called a reference price. And this will be calculated after every 30 seconds on a rolling basis. Which means, let us say now the time is 10 a.m. From 9:59:31 seconds to 10 a.m., they will take the prices of last 30 seconds, do the average, and then they first identify something called a reference price, right? Let us say uh, the price is 100 rupees at 9:59:31 seconds, and then it maybe closed at 120, and there are a lot of ticks in between, 102, 5 and all that, and then let's assume that the average price is 110. So this will be the reference price. All right, this will be the reference price of last 30 seconds. Now what NSE says is, if this reference price is less than 50 rupees, right, then the calculation is different. If it is greater than 50 points, then the calculation is different. Now, before we talk further about these prices, first we need to understand limit price. In limit price protection, we have something called limit price, right? So first, let's actually discuss what is a limit price just for beginners. When you place a limit order in the exchange, okay, you need to give two prices. One is called trigger price, and then the other one is called simply price or limit price, right? Let's say you bought an option at 100 rupees, and I don't know, maybe your stop loss is 90 rupees. Okay, 90 is your stop loss. Entry is 100. Now when you are placing the stop loss, brokers ask you for a couple of prices. One is called trigger price and the second is called limit price. Now 90 will be your trigger price, and then probably 80 will be your limit price or simply price. Okay, which means you are asking the exchange to execute your order in between 90 and 80. Okay, you are saying that if it comes below 80, do not execute my order. I'm not willing to give up more than 10 points loss or something like that, whatever it is. But you are saying that you only want the order to get executed between 90 and 80. Of course, NSA always tries to execute at the best price, 90 rupees only, or 89.9 or 89.8, something like that. It tries to give you the lesser loss. But you are saying that, I don't want to take more than 10 points difference. So you are giving 90 and 80, right? Now, what so many people used to do in the past is they used to give 70 or 60 or even 50 also as the limit price. Why? Because anyways, NSE will give you, the best price, right? But if you give less difference here, let me clear this. Let us say you have given 90 and 80, right? And your entry is 100. Now, one point to note here is if market directly jumps from 91 rupees to 79 rupees, then your entire order will be skipped because you are saying the exchange that you only want your order to be executed between 90 and 80, right? So if this happens, then your order will completely be skipped, and this might even go to 60 rupees, 20 rupees, or even zero also, and you have to face the entire loss. As a result of this, what people started doing is they kind of started increasing the difference between the limit price and trigger price. Okay, some people are putting 70, 60, 50, 40, something like that. And because of this difference, widening difference, free trades have been happening. Okay, now that is again a different problem because if free trades happen again, the fluctuation will be like this. So NSA has to again handle this kind of thing. So what they have done is they came up with a logic saying that you only can put X amount between the trigger price and limit price. You cannot keep like whatever you want. We are telling you the rules. You have to follow those rules, and you have to keep only certain amount as the difference between trigger price and limit price. That is what we are going to see now. So we already talked that reference price will be calculated. Now, if the reference price is less than 50 points, then 20 points is the maximum difference that you can give. Okay. If it is greater than 50 points, then NSE calculates in terms of percentage, not points. Please understand this very carefully. 20 points is this, and then 40 points is this if the reference price is greater than 50 points. Okay. Now let's see this with an example. Let us say you have taken an option at 50 points. This is the entry, and your stop loss is 40. Okay. Now, since this stop loss is less than 50 points, okay, um, you can calculate 20 and then say that trigger price is 40 and limit price is 20. You can say this, or you can place this in your trading terminal. However, if your entry price is 100 and then 90 is your stop loss, you can place this as a trigger price, and then you can calculate 40 percentage from here, which is 36 points, right? Which means 54. Yeah, 54 points can be your limit price. Now, what happens if you place more than the given value? Okay, let us say for this, instead of 20, you have given 19 as your limit price. Immediately, NSE will cancel your order when it reaches your stop loss price. Now, a very important first point that all of us have to remember, NSE does not reject your orders when you are placing the stop loss order. Okay, it will only reject your order at the time of stop loss. This is a very, very dangerous situation, and we will talk more about it. But for now, just remember, NSE does not reject your orders at the time of placement. When you are placing the orders, it does not reject. It will simply accept it. But at the time of the price reaching your stop loss, then it will reject the order. Likewise, here also, In case if you give 50 points also, NSE will accept. At the time it reaches 90 rupees or 90 points, then it will calculate and see that this is more than 40%, and then it will straight away reject your order saying limit price protection error. Okay, so you have to be very, very cognizant of the fact that when you are placing it, your values between or the difference between the limit price and trigger price is way within the limits prescribed by NSE. Okay, now comes the real problem. Uh, the real problem here is this 20 points or 40 percentage that we are calculating here. What we are doing is we are doing based on the stop loss that we have in our mind, right? But please note that this is really going to be a problem for option sellers. Option buyers can still go ahead and calculate that beforehand and then place it. That will not be a problem. But for option sellers, this will be a problem. I will give you an example and then show you why it is going to be really a dangerous scenario for option sellers. Let us say you sold an option at 100 points, and then your stop loss will always be on the higher side, right? Let us say 25% is your stop loss, which is 125 points. So let us say for some reason you want to place a stop loss at 125, leave about the percentage and all. 125 is your stop loss. Now if you calculate, first of all, this 125 is above 50 points, right? So obviously we tend to calculate 40%. You can also calculate less than 40%. Let us say you calculated only 10% and you have placed it around 137 or maybe 140, for example. Then what happens is, or what might happen is, sometimes, as you know, options jump a lot, right? So let us say this 100 rupees option came to 105, 110, 115, 120, 124, and then from 124 it directly jumped to 150. In this case, your order will be skipped because you are giving the values 125 and 140, for example, right? Because the value is very less, only 15 points difference is there, your order will be skipped, and then this is a dangerous situation. So generally what people do is people give higher values. What is the higher value that you can give? 40% is the higher value. Now let us say you have utilized entire 40% difference and you calculated 40% on this 125, right? Now how much will be the 40% of 125? It will be 12.5 into 4, it will be 50. Okay, so 50 points is the maximum difference. So going by this logic, what you thought was, okay, chalo, let me put 50 points difference and then 175 will be my limit price, right? So your trigger price is 125, which is your actual stop loss, and then 175 will be your limit price because you calculated 40%, right? How much is your entry? Your entry is 100. Now, imagine a scenario where initially it went to 90 rupees, 80 rupees, 70 rupees, 60 rupees, like that. It went till 20 rupees and you are in a good profit. Okay. But for some reason, you do not want to book it because you thought that, it will further go down. So from 100 rupees initially, it went down to 20 points. Let me clear the board. So yeah, 100 rupees is your entry. It went to 20 rupees, and then from 20 rupees it jumped to 125 points again, okay, due to some reason or news, whatever it is. So if this happens, then the average price or the reference price of last 30 seconds can be around 65 or 70 points, right? Let's say 70 points. Now NSE calculates 40% from here, okay. Because this 70 is greater than 50, it calculates in terms of percentage, not points, right? So 40% of 70 points is how much? 28, right? So your range now is 28 points. Remember, initially what you have done, we have calculated 40% from 125. So that became 125 plus or minus 50 points becomes 175. But if you see, now the range, new range is 28 points. So this order will get rejected. This is a very key and critical point that one has to remember. We calculate 40% based on our original stop loss, assuming that market will smoothly come to 125 and the last 30 seconds price is more or less, near 125. But if market fluctuates a lot, okay, then the reference price keeps changing, and so the 40% range also changes. If you put small range like 125 and 140, then there is another problem. Market might jump from 124 directly to 141 and then your entire order will be skipped. Okay, if you put higher range, then NSE will cancel the order, saying that the range allowed is only 28 points, for example, as we calculated, and this might be cancelled by the exchange. So option sellers have to be very very careful, especially discretionary option traders have to be careful, because even if you skip 1 or 2 minutes of screen time and this thing happens because of some news, then this might even go to 200, 300 or 400 points, and then you might be in loss. Okay, and also people who use algo trading also have to check whether your software has these kinds of fail safe mechanisms or not. If you look at all our products, our website is bluechipalgos.com, where we host all our algo tools. So we have a couple of products for these time-based straddles and strangles. These days, time-based straddles and strangles are very famous, right? So for these strategies, we have one web product where you can operate from your mobile, and one desktop product for dedicated traders. They can install and do these straddles and strangles. And of course, we have other products for scalpers and then discretionary option traders and all that. In all our products, we have deployed these kinds of fail-safe mechanisms. What happens here is, if your order is cancelled by exchange for some reason, immediately our algos will identify that and then exit the order at market price. Right, these kinds of backup stop loss mechanisms are very much required in these times where the markets are very fluctuating. So please ensure that you have these kinds of tools available to handle your trades, otherwise it can really be dangerous for your trading journey. All right. So one point to note here is, nobody can anticipate the reference price at the time of stop loss hit. Okay. Remember one thing, again reiterating, NSE does not cancel your order, stop loss order, when you are placing it. When you are placing it, it will accept it. At the time of stop loss hit only, it will back calculate the reference price, and then it will reject it. So even NSE doesn't know, right, what will be the reference price at the time of stop loss hit. If NSE doesn't know, obviously we also cannot know, and that is the reason we will place some order and then it might get cancelled at the time of stop loss hit. So the first point is, cancellation will happen only at the time of stop loss hit, but not at the time of placing the order. And the second point is, nobody can anticipate what will be the reference price at the time of stop loss hit, right? Because of these things, you have to be a little careful when you are trading in high volatile instruments like options. Now let's summarize. First is why LPP is introduced. It is introduced to handle freak trades, and how it is calculated based on a reference price. Now if the reference price is less than 50, then 20 points is the accepted range. If it is greater than 50, then it is in terms of percentage, 40% is the value. And these cancellations might happen from exchange only at the time of stop loss hit, but not at the time of placing the order. All right. Now, whether this is good or bad, if you look at the broader spectrum, yes, these are the measures that have to be taken by the exchanges. These frameworks are really, really very important so that people do not manipulate the market. But from individual trades or traders perspective, this is really really a dangerous move, because nobody can anticipate future prices, and if stop loss gets cancelled and you are not in front of the system, and if the prices shoot up, then option sellers can really really face a lot of loss. This might not be a scenario for option buyers. Let's not get into that, because for option buyers, even though the price falls from higher range to lower range, it doesn't really matter. But for option sellers, if the price quickly moves from lower levels to higher levels, okay, that's when the range starts shrinking from 50 points we have seen in the example. Initially 40% means how much? 50 points, right? But later it came down to 28 points. This shrinking happens because the price is moving from lower levels to higher levels, right? The market is moving. But for option sellers, this is not a problem. The price moves from higher range to lower range. In fact, this 50% keeps on increasing to 60 points, 70 points. They have a wider range. So let's not get into too much of calculation here, but just remember, for option buyers you can still calculate 40% on the reference price, but for option sellers, okay, it's a little tricky to handle these scenarios. I hope you understood what LPP is and how it is calculated now. In case if you like the video, please do not forget to like the video, and as I said, please subscribe to this video and don't forget to hit on the bell icon. You are going to hear a lot of interesting concepts like this, and also a few strategies that we are going to introduce in future. Okay, thanks for watching the video and have a nice day.